There are several reasons that investors find gold and silver attractive investments. And there are several ways by which they can invest in precious metals. Throughout all of history, gold has been seen as a special and valuable commodity. Gold has provided financial security during times of geopolitical and macroeconomic chaos and turmoil. Gold and silver are also seen as hedges against inflation. Furthermore, some people just find it personally satisfying and enjoyable to purchase precious metals in bars or coins or jewelry, and be able to look at them and hold them. In recent years, there have emerged additional reasons to consider alternate investment vehicles. The introduction of central bank digital currencies. CBDCs will give governments an immediate view of all financial transactions. This has created major privacy concerns, and has raised the specter of more autocratic and intrusive government control over the lives of citizens. The Bank of England has disclosed that their proposed digital currency could be programmable. By that they mean that it could be issued with an expiration date to force people to spend it by a particular date. The government could do this if they think that it is desirable to stimulate consumer spending. And CBDC could also be programmed to allow spending only to purchase items that the government approves of. Canada has already demonstrated how a government can quickly, and without due process, use their banking system to punish those who hold opposing political views. A government armed with CBDC would be able to quickly empty the digital wallets of dissidents and activists. CNN reported the following. A weeks-long blockade in the Canadian capital has led to almost 200 arrests and prolonged suffering for businesses caught in the middle of protests against COVID-19 mandates. The RCMP froze 206 financial products, including bank and corporate accounts, and froze a payment processing account valued at $3.8 million. The surveillance state will allow the government to immediately impose fines on anyone for actions that the government finds undesirable. Surveillance would also have a chilling effect on freedom of speech. People would be reluctant to express views that conflict with government mandates, lest they expose themselves and their families to reprisals from the government. Some observers have speculated that a natural extension of these punitive actions will be to impose currency controls on those who would attempt to move their savings out of the country and to another country's banking system. Transfers of funds could be barred. These are all good reasons to buy gold and silver. One might even say that these are compelling reasons. However, the ownership of physical gold and silver comes with serious challenges, too. And there are other ways to invest in gold and silver that avoid some of these risks. Forms of physical gold. Physical gold can be bought in three forms: gold bullion in bars, gold coins, and gold jewelry. It is always very important to purchase gold and silver only from a reputable dealer. Gold bullion is the most cost-efficient way to buy physical gold because the other types, gold coins and gold jewelry, usually sell at a premium to the market price of their gold content. This is called the spot price. Gold coins usually sell at a premium because coins have a collector's value, perhaps 5% over the market price. Gold jewelry sells at an even greater premium because of the cost of the design and manufacture, perhaps 20% or more above the spot price. One disadvantage of buying physical precious metals is that they do not produce any cash flow. In order to make a profit from owning gold or silver, the spot price of the metal must rise. In contrast, a business, such as a gold mining company, can generate a profit by increasing its sales and earnings. An investor in a gold mining company would see his holdings increase in value when the price of gold increases, and would also benefit from increased revenues and earnings in the company. Another drawback of holding physical gold or silver is the need to safeguard the precious metals. The owner of physical precious metals will need to insure the gold or silver and pay for safe storage in a bank vault or safety deposit box. Still, another risk of holding precious metals is that if you need to sell, it might be difficult to receive the full market value for your holdings, especially if they are coins and you need the money quickly. So, you might have to settle for selling your holdings for less than they might otherwise command in the market. If someone wants to invest in precious metals but avoid the challenges and expense of owning physical gold, there are several options available. There is no reason to hold the physical asset when you can simply have the same value in a secure and insured trading account. Gold futures. Gold futures are a good way to speculate on the price of gold rising or falling. An investor in futures can even take physical delivery of gold, if he wishes, although physical delivery is not what motivates speculators. Using futures also allows the investor to utilize an enormous amount of leverage. In other words, you can own a lot of gold futures for a relatively small sum of money. If gold futures move in the direction you expect, you can make a lot of money very quickly. On the other hand, a futures contract cuts both ways. If gold moves against you, you'll be forced to put up substantial sums of money, called margin, to maintain the contract, or the broker will close the position and you will be forced to take a loss. So, while the futures market allows you to make a lot of money, you can lose it just as quickly. The futures market is for sophisticated investors, and you'll need a broker that allows futures trading, and not all of the major brokers provide this service. ETFs that own gold. If you don't want the burdens of owning physical gold or dealing with the fast pace and margin requirements of the futures market, then a great alternative is to invest in an exchange-traded fund, ETF, that tracks the commodity. The goal of those ETFs is to match the price performance of gold minus the ETF's annual expense ratio. Another benefit to owning an ETF rather than bullion is that it's more readily exchangeable for cash at the market price. You can trade the fund on any day the market is open for the prevailing price, just like selling a stock. So gold ETFs are more liquid than physical gold. ETFs give you exposure to the price of gold, so if it rises or falls, the fund should perform similarly, again, minus the cost of the fund itself. Like stocks, gold can be volatile, but ETFs allow you to avoid the biggest risks of owning the physical commodity, protecting your gold and obtaining full value for your holdings. Mining stocks. Another way to take advantage of rising gold prices is to own the mining businesses that produce the metals. This may be the best alternative for investors because they can profit in two ways. First, if the price of gold rises, the mining company's profits rise, too. Second, the miner has the ability to raise production over time, giving a second source of profits. Anytime you invest in individual stocks, you need to understand the business. You will want to be careful about selecting a proven player in the industry. And like all stocks, mining stocks can be volatile. ETFs and mutual funds that own mining stocks. If an investor wants to invest in mining stocks, an ETF or mutual fund could make a lot of sense. Gold mining ETFs and mutual funds give you exposure to the biggest gold miners in the market, with the added benefit of diversification among many companies in this sector. If one company performs poorly, it would not affect your entire position. Of course, that would still not protect an investor from factors that affect the entire industry, such as an unexpected decline in gold prices. Conclusion. If you're concerned about inflation and other calamities, gold may offer you an investing safe haven. Though in the shorter term it can be just as volatile as stocks, over the very long term, gold has held its value remarkably well. Any form of investing carries risks. Gold is no different. But the idiosyncratic gold market isn't forgiving and takes a long time to learn. This makes gold ETFs and mutual funds the safest choice for most investors looking to add some of gold's stability and sparkle to their portfolios. Thank you for watching. If you would like to see more videos on this subject, give it a thumbs up, and don't forget to subscribe. If you leave a message below, I will respond. Remember, always do your research and consult with financial professionals before making investment decisions. The information provided in this video should not be construed or relied on as investment, accounting, legal, or other professional advice under any fact or circumstance. You also might like to check out my pages on Facebook and Rumble, the Global Macro Digest, and see my books that are featured there.